have this mentality where the market has a way of beating you down early on until you get to that proven long-term profitability. And what I mean by that is you have to look and say, how many months am I up? What am I up and how many months straight? And you're going to have a losing month here and there. That's just inevitable. But the idea is after 5 years, when you look back and you say, okay, well, 5 years ago, I lost 3 months out of 12, then it was 2, and then it was 1. And, generally it's 1 a month per year. Eventually you can say, okay, I finally have this down where I'm going to be able to survive in this business. But again, a lot of people in the crypto markets are probably thinking that right now because you've seen Dogecoin collapse. I mean, even Bitcoin is down and they're saying to themselves, I thought I was going to be looking at Bitcoin at 100,000 and now it's at, 40,000. What's going to happen? I put so much money in, and it's a tough path. But again, I encourage education. Education, you're going to pay the market or you're going to pay someone to educate you. It's generally, and I found this the hard way, it's cheaper to pay someone. People come in to trade crypto or stocks or anything, and they're like, all right, well, I'm just going to go in and I'm going to start making money. But remember, it's a career. And you have people that you're going to make the same money as a brain surgeon or, and think about what brain surgeons have to do. They have to go through like so many years of schooling, right? And then they have to pay so much money that it's inevitable that you have to think that you're going to have to go through some education, right? And again, it's either the market teaching you or are you paying for it? So again, education's so important. It'll save you so much money in the long run. I don't remember the exact moment I heard of Bitcoin, but I do remember this, and this is something crazy. So Bitcoin had made a run to like 2,500, and I don't honestly remember what year this was, but we're probably talking like 2014 maybe or so. In fact, I'm going back on the chart now just to kind of see. I have to go back really far here, but yeah, so there was a point where it topped out around 2,500, and I still remember saying, you know what, I got to buy this when it comes back in. And I think I put my order just below $1,000, being like, all right, well, it'll come down right around there. And I remember it came within like $5 of filling me, and then it just went up. And
wow.
I never got my Bitcoin. And looking back on it, it's like, oh, geez. But now again, would I have held it all the way to 65? Probably not. I probably would have sold it at some point prior. But, obviously since then, I've been in and out of Bitcoin. I was a buyer back in 2019, but when it was in the under sub 10,000 level. And then again, I sold too early. I sold a huge chunk when it got back to the 2017 high near 20,000, just because I figured that would be a short-term top. And then we saw it just rip right through that. So, investing is a matter of taking profits. What I always say is no one ever goes broke taking a profit, but you have to be aware that if you leave your money in the market and you get too greedy, they say pigs get slaughtered, and that's the truth. Always been someone who is financially aware. And I think this comes from my upbringing. And when I see the Federal Reserve just, every time we get in a little bit of a crisis. Now, COVID was a big crisis, but prior, any little recession, they come out and lower interest rates, they print more money. Looking at the government just spending trillions and running up the national debt plus 30 trillion at this point, that's where, to me, Bitcoin has its genius. The 21 million maximum run, the way where you can say, okay, well, I can diversify in some gold, which is a good way to do it too. But also now you have this new asset, Bitcoin, where you can also diversify out of dollars and protect yourself. And where the US is the biggest kid on the block right now. So the dollar is holding up. There will be a point where that doesn't continue, where the US debt, where the printing of money causes the dollar to decline seriously. And we're already seeing it with inflation, right? 8% inflation means that, your dollar is only worth 92 cents a year later. It's pretty scary, but that's going to continue, and the dollar will start to really collapse. And again, we might be 5-10 years out from this, but at that point, you got to have your money diversified in other places to protect yourself. Again, being in dollars, even being in stocks is risky, because I think there'll be a massive decline in US equities too at some point. I don't use leverage with my crypto trading, mainly because, again, I probably at this point, I have enough capital in those accounts to cover the trades that I want. But, especially when you see an asset that can drop 80% from high to low or low to, and even some of the intra drops can be so dramatic. You have to understand that if you're leveraged out even 3-to-1, you get a big enough overnight drop on a blip on Bitcoin, it could just wipe. You could be forced to sell, or your broker could actually sell for you. So I really caution people about it. In investing, it's the marathon, right? It's a marathon, not a sprint. You want to do it slowly, and you'll compound your profits over time. It'll just amass into a fortune. What you can't afford is getting wiped out. And I proof in the pudding, if I hadn't gotten wiped out as many times as I did earlier, I'd have a lot more than I do now. But people have to remember that there's no get rich quick scheme. Occasionally it works, but it sets you up for the major fall later on when you get addicted to that kind of throwing all your money in something and it going up. Eventually it goes down and then you get in trouble. Yeah. I do believe in cryptocurrency longer term, mainly Bitcoin and maybe some of the other coins. And so I see this long-term vision of the dominance of something like a Bitcoin and how it can actually diversify you out of the risk of printing money type stuff that we see. But also, doing the stock service, people were just coming to me and saying, hey, listen, could you start a crypto service? Could you start giving crypto calls? And the beautiful thing about charts, and everything I do is based on charts, which charts give you probabilities, right? Probability of a move in this direction or that direction, is that they're the same. It could be a stock chart, it could be a commodity, a currency, or a crypto chart. They act the same because charts are created by humans that are buying and selling. And humans that are buying and selling are trading off of emotion. So it doesn't matter what it is. If it's a chart, it's going to be based on emotion, fear, and greed, and therefore charts work the same. So it's really a very natural thing to go to the crypto market and say, okay, well, here's a chart of Bitcoin, let's trade it. It could be a stock for all I care. It doesn't really matter. It's tradable, and that's the awesome thing about it. One of the negatives of cryptocurrency right now is that generally cryptos all move together, right? So, if Bitcoin's dropping 10%, it's very rare Ethereum's going to be up 5%, right? So they're all going down or all going up together in general. With stocks, it's different. Stocks can have earnings where one stock can rip higher even if the market's down. There's so many different stocks, different large cap stocks, that there's always different trades in both directions on the market. So, whether it's, investing in Chinese stocks or South American stocks or US stocks, or, you could be long, you can be short. So there's so many varieties that I actually find that I still have way more opportunities in the equity markets. But not to say crypto isn't fun. I'll tell you, it's a great market to be in. So one of the things to keep in mind is that investors in general, new investors, and I did this all the time, is when they assume that they're going to be right when they go in the trade, right? So there's this almost like, I'm going to put all my money in a trade because it's going to go up. I'm going to buy Bitcoin here because it's going to go straight up and I'm going to be right. They're not taking into account the probabilities that it goes against them. So maybe there's a 60% chance it goes up, but there's still 40% chance it goes down. One of the best changes I made in my career, which has actually been in the last really like 5 or 6 years, is that I start with a smaller than normal position size. So I might say, okay, in Bitcoin, let's talk about Bitcoin. So with Bitcoin, I started with a position in Bitcoin at, believe it or not, 48,000 was my first entry, right around 48,000. But I said, all right, I'm going to buy $100,000 in Bitcoin. I'm going to just put 20,000 in here. And then what it enabled me to do is when I was wrong and it came down, I was able to dollar cost average. And I just bought another 20,000 here. And then when it got to my next major level, which was just around 33,000, that's when I went in with a little heavier position. And when it bounced, I was able to make 10% on that position just by doing that. So it kind of enables you to correct for errors that the market is naturally going to throw at you. And again, the key is going into a trade, be humble enough to know that the market can do anything at any one point. And you need some of those extra kind of bullets on the side to use them if you need them. So for me, I have, even though Bitcoin bounced off a major support at 33,000, I think this is just an interim bounce before it heads lower. I do have a price target sub 20,000. I don't know how much lower than 20,000 it'll go, maybe just to 20,000. I know that's not what people want to hear, but if you look at what's going on, if you look at past cycles in Bitcoin, you get an 80% drawdown. I mean, even if you get a 70% drawdown, you're still down to 20,000 or sub 20,000. So people need to be ready for that. All it would be doing would be replicating past cycles, and then it can go on to new all-time highs. So I am overall bearish on Bitcoin for the next year or two. And I think at that point, you will see the emergence of it as a real store of safety. I'm hopeful that we get some government regulation. I know everyone's scared about regulation, but if you ever want pension funds, which have trillions and trillions of dollars. If you ever want older generations to buy in, you need some sort of safety net in the crypto world. Right now, it's still the Wild West out there, whether it's NFTs or whether it's people getting into your account, stealing your Bitcoin. It's not FDIC insured like stock accounts are, where the government will give you your money back. So there's so many different things here that need to be fixed, but I do think it will get fixed. And then I see Bitcoin, honestly, in the next decade, I would be shocked if it doesn't get to 500,000.